Hi guys, and welcome back to Cheeky Crypto. Today we're talking about the recent rejection of Bitcoin at the 200 EMA, which is a critical level for the world's largest cryptocurrency. The 200 EMA is a critical technical indicator, and a break above or below can signal a trend change. In this video, we will take a closer look at what caused the rejection, what it means for the future of Bitcoin, and what traders should be aware of moving forward. So sit back, grab a coffee, and let's get into it. Okay guys, so here we are on the weekly chart. This is Bitcoin paired up with USDT, and Binance is our data source. Now, as we were talking about yesterday, we said that there's the 200 weekly moving average. This weekly moving average, this EMA, so the exponential moving average on the weekly time frame, was set at $23,711.70. Okay, and so we were looking to see whether or not we were going to close above this or below it, basically last night, right? And what we actually saw was us close above this level. Okay, so we closed technically above the EMA on the Bitcoin USDT pair, okay? And we closed our position here at $23,742.30. So we marginally were technically above that 200 EMA on our weekly chart. Now, the interesting thing about this is that even though that we did actually technically close above it, we have reacted negatively. Lots of traders have seen this as an upper area of resistance and have actually reacted by bringing the price down. Now, we can kind of look at this and say that maybe we always were expecting this to be the resistance, and therefore it was kind of priced in that we were going to get knocked back in this way. So we want to be a little bit optimistic to say, okay, cool, we closed above it. That should be deemed positive because, a reversal in trend. Yet here we are on Monday with this first candle taking us down a little bit deeper. Now, obviously, we've got a whole week here. Can we close above it? And this could just actually then just be a wick, on a couple of days within a chart. So it's definitely possible that we rally on up just a little bit. But this week is a pretty bearish week. And I think a lot of the price action that we've had over the last couple of weeks is basically taking into consideration what is about to drop this week. So if we actually bring up our kind of list of things that are occurring in this week, we can see that today, the 30th of January, we had the consumer confidence in the euro area, the economic sentiment, the industrial sentiment, the European Union, EU bond auctions. All of that kind of stuff is pretty standard. It doesn't really move the market. Tomorrow, we have got, this is the 31st of January, China's manufacturing PMI. We've got France's inflation rate, Germany's unemployment rate, the GDP growth in Germany for Q4. We also have the UK mortgage approvals and lending for December. We have the Euro area's GDP growth rate for Q4. We have the Germany inflation rate, and we have the USA's consumer confidence. Okay, so there's some stuff here that, and depending on which country of origin that you're in and all that kind of stuff, could have some negativity on the market or positivity if some of these inflation rates are, not as aggressive as maybe, some people think, right? I think actually they're going to be more aggressive because there's no point in slowing down now when you're starting to maybe make some progress against inflation. So, I'm thinking this is more than likely going to be negative. Then, of course, we get to the main event, which is Wednesday, the 1st of February. And Wednesday, the 1st of February, we have the nationwide housing prices year on year in the UK. Then we have a Euro area's core inflation rate, unemployment rate. And in Italy, we have the inflation rate, the USA manufacturing PMI. And then, of course, in the evening, 1900 UTC is the Fed interest rate decision. A lot of people are speculating that it's going to be 0.25. I think it'll be 0.5. And I think, they're going to be just as aggressive and kind of basically look to kind of curb inflation if they can. So they're making progress. I don't think they're going to slow down. And, it's going to be interesting to kind of see how the markets react to this. Like I said, I think we're going to be negatively impacted price-wise in terms of Bitcoin, because I think a lot of this stuff's already been priced in and profit's going to be taken off the table. And I'm going to walk you through what's going on there. But I expect volatility regardless, just because I'm saying, I'm kind of expecting it to go down. I could be wrong on that, and it could, of course, go in the opposite direction. I expect actually it will probably go in both directions within the first hour of of this interest rate decision being made. I don't think it's going to be unanimous one direction. I think we'll move up, we'll move down, we'll probably move down, move up, and so forth. I expect volatility, and I would not be trading Bitcoin in and around that Fed decision. I'll be looking at what happens afterwards and get some solid kind of foundations in place. Now, on the 2nd of February, we have in the UK, the Bank of England's interest rate decision. We have the Euro area's ECB interest rate decision and the ECB press conference. So again, more stuff that's potentially going to move the market. Then over here in the 3rd of February, we have a Euro area's PPI for December, the USA's non-farm payrolls, unemployment rate, and the ISM non-manufacturing PMI in January as well. So there's a lot going on this week. And I think a lot of it is going to basically be quite negative in terms of price action on Bitcoin. So we want to be a little bit cautious, right? So although we kind of did technically close above this EMA, I think a lot of the kind of stuff that is coming this week, I think is actually kind of priced in. And so we naturally saw profits getting taken here because there's going to be a lot of fear in the space. And of which right now, we're in a greed area from the fear and greed index. And when people are greedy, you should be fearful. And when people are fearful, you should be greedy. So we're getting ready to kind of see profits getting taken off the table here from a sentiment feeling as well. Now, if we come down into the smaller time frame stuff, we actually have an interesting structure appearing down here. Now, I do liken this current move, this rejection from our 200 weekly EMA as a 335 regular flat correction. So if I draw this in, I have 1, 2, 3, 4, and 5 coming down here. Okay, now this might still be a work in progress. We'll see how that kind of goes. But I'm expecting the next move to kind of be positive. And the US market has just opened, so we'll see how they kind of take this. But we'll see if they are going to be moving on up. I think that a move up into the 23,300 to 23,500, this area here that was previously resistance, might be resistance again. Now we've broken through it. So a move upwards there would be interesting. Now from this 335 corrective structure, where would we be looking? Well, this actually be the 618. That's a pretty interesting area. So a 38.2% retracement up. That could be interesting. All the way up towards the actual 618, 61.8% retracement up on this higher area. You can see there's actually a lot of resistance up there as well. So from the fib levels, it actually makes sense that we would have a move upwards into that degree. You can also see that we're oversold on our hourly chart here. Our 4 hour still has some room to the downside, so we might see some volatility before we carry on up. 8 hour can come down. The 12, 16, and 20, they can move upwards. I'm not too concerned there. And our daily is actually in a reasonable position. Our daily chart, as you can kind of see, is still inside our channel here, and you can kind of see how that's kind of reacting. Big candle coming down here. But at the moment, nothing, I mean, this one's a yeah, so at the moment we haven't got any kind of bearish engulfing or bullish engulfing candles. We are, of course, going higher highs and higher lows. These unfortunately have a tendency to break down, so do watch out for that. But we might be a push up higher here before we actually have that collapse down. Take out any potential short positions before moving on down. So keep a caution, or stay really cautious when it comes to the price action of BTC there. So all in all, our smaller time frame here, this is not an impulsive structural point to the downside, but I would expect it to be a giant kind of, you know, A, B, and C structure to some sort, and then maybe that's going to be nested inside another subwave count and so forth. I am looking for corrections to come and take us back down out of these areas. There's a fair value gap here that's also been left behind, so don't be too surprised if we do not come back down and visit even into these areas of 21,600 to 22,200. That will be an interesting point. Now, also, it's probably worth noting that the Wyckoff accumulation patterns are both in place still. There's 2 of them. One has a spring event, one does not have a spring event, and I am looking for, if we are following these, by the way, it's a big if because this is a loose fit, but if we are following this pattern, then our expectation is going to be 18,626, the secondary test of phase A, this one over here. Okay, this secondary test in phase A, this one down here at 18,626 would be the area that we'd find support or lose that support and have the spring event. So you can see that's where the differences come in, right? We have this area here. We are not looking to break it. If we break this level, okay, we don't break it here. You can find support on it in schematic number 2. But if we do break it like we do in schematic number 1, then we'll have a spring event, which is a new lower low. At the moment, we don't have to, but I am looking for corrections to come on down. Now, in terms of our weekly chart, we are overbought. We're quite overbought, so do expect corrective action to the downside, but don't expect it to be straight lines. It's not going to be a big candle like we saw with FTX. Not in my that's not my expectation anyway. But we'll see. It's going to be a big week for crypto, so there's going to be a lot of things to kind of think about, lots of things to kind of discuss. Essentially here, we are looking for a DXY. A DXY is more than likely also going to get poised up for a bit of a move to the upside. Let's take a look. Okay, so I'm looking at a move up with the DXY before coming back down again, and I still think that there's a potential move up to the 120 levels. Now, there's no guarantee that this is exactly what's going on because you can't really use Elliott wave theory on a DXY, but it kind of gives us a bit of an idea that there might be this move to the upside. Now we're looking to finish off this move down. We can also see that our weekly, okay, in relation to our Bitcoin chart, right, our Bitcoin is overbought, but the DXY is oversold on the oscillator. So the oscillator is giving us a pretty clear indication that things are likely to actually start moving again. Now, this move up here is very, very rapid. And this is a correction coming down that's quite nice. So we have to understand that the Bitcoin's price action has been moving up the way that it has up here, right? We can take a look at that, right? Bitcoin goes up in price, and that's because the DXY, if I find it here, has been coming down in price, okay? So as the DXY goes down, Bitcoin goes up, and as Bitcoin goes down, the DXY will be going up, or as the DXY goes up, Bitcoin will go down. Okay, so let's kind of keep these things in our minds when we think about, you know, what's actually going on here, because we've spoken about this a number of times already, and the fact that there is low volume when it comes to the price action of BTC. So for example, we can see right in here that our volume profiles are dropping, yet we've come up into higher highs. This is a divergence that is not a good sign. Okay, we're running out of momentum to the upside. Not only is that clear from the oscillators, such as the stochastic RSI or the RSI, but we can also see quite clearly that the volumes are decreasing as price is pushing up. That's never a good thing to be looking at. Again, we can also take a look at it from the RSI point of view. If I actually come back to this one, come back into our Bitcoin chart here, and come over into our, remove the stochastic and put the RSI in, and come into our daily chart, here we can see something also very similar. Okay, we have not so much the higher highs, that's fine where that's going in inbound, but it's actually more that if we come further back, we come over to this area here. Okay, if we find this peak and price, we can see that we've come down into lower highs on the price. And this is a bit of a loose one, so do bear with me. But here we are coming up way higher on the RSI. Now we're correcting down, and there's a little bit of positivity to be found in this and the recent kind of price action, but we can't just be focused in, like hyper-focused on the smaller movements. We need to see some of these kind of key levels on the zoomed out charts get broken. So I'm still positive here that Bitcoin is, you know, in an okay position. It's not like it's demanding that we go down into new lower lows. And, you know, there's still the possibility that we do, and we do have obviously the Wyckoff patterns, and the Wyckoff patterns are telling us that one of these has a scenario of a spring event, which would be a new lower low on our previous existing lows. However, when we take a look at the other charts, all we're saying here is actually we probably do have to come down a fair amount, maybe around that $18,000 level, but there's no guarantee that we come down into new lower lows. That's pretty much obvious within the data of the charts at the moment, but we should be a little bit cautious, because although the charts are not giving us any kind of indication that new lower lows are coming, we do have wallet counts that are interesting and potentially pose a bit of an issue in terms of the accumulation of Bitcoin in potentially the wrong hands. And until the billionaires and the multimillionaires are actually accumulating vast amounts of Bitcoin, I'm not sure the bottom is really in. So here we have the kind of the larger institutional player wallets. We have the over 100 Bitcoin, over 1,000 Bitcoin, over 10,000 Bitcoin. We can see that the Kraken's been accumulating. You might think that's a positive, but I'll go through why that's not. You can see that the whales have been selling. Again, you have the sharks that are selling. So, you know, there's a lot of selling pressure here, and the retail investors are kind of, you know, just plateauing at the top there. Now, what we do is if we come over to 2018, we can see that there was a transfer of wealth between the shrimps, the over 1 Bitcoin players, right? These ones here, where they sell during this flat period, and the whales are buying during this flat period, right? The Kraken wallet during 2018's bear market was accumulating, and they accumulated during the bear market and then basically flooded the system, making so much Bitcoin available to be sold, or on the market to be bought, I should say. It basically allows for people to kind of start selling their assets cheaper because they want to sell theirs before someone else does, right? So supply and demand is a very interesting concept that we really have to kind of get our heads around, because everything in the world comes down to supply and demand. And if there's too much supply that's just automatically available, then people are going to react negatively. They're going to want to offload their assets faster, and they will make it cheaper in order order to do so. Likewise, when Bitcoin's accumulated and the supply is shrinking but demand increases, price goes up, right? So it's important that we kind of reflect that this is what happened with the Kraken wallet in 2018, and this is where it is right now. It's been accumulating during the bear market, and it is yet to drop its load on the market. Once that happens, do we think that, you know, the price of Bitcoin is going to be a new lower low like it was in 2018? If we actually come back over to the Kraken in 2018, you can see that this is what kind of really dragged the price down into the bear market bottom. Now, that particular event hasn't happened yet, but we have seen a very similar setup, as in all of these wallets and all of this accumulation during the bear market has basically allowed these wallets to be really quite flush with BTC. And, well, if we go back to 2018, then they basically built up huge positions and then just dragged down the market. And whilst that was happening, you can see that the whale wallets here absolutely skyrocketed right in here as that occurred. So we want to be a little bit cautious that although the charts and the price action are not saying we categorically have to have a new lower low, when we actually analyze where the money is flowing and what has happened historically from the money flows between the wealthy and the not so wealthy, we can see that actually a very similar setup is in play. And, you know, we should be cautious here, because until big institutional players are accumulating at the expense of retail investors, I'm not sure this bear market is truly done. So expect some consolidation, expect some price drops, and maybe expect new lower lows, possibly. I'm not saying that they're a guarantee, but I am concerned that they are something that we should be thinking about. I'm going to leave this video right there, though, guys. If you found it useful, smash that like button. I do appreciate that. If you're new, subscribe. And if you haven't yet joined us in Discord, guys, you're missing a trick. Check it out. Linked in the description below. Until the next one, have a fantastic day, guys.